To close out our first day, we have an exciting panel discussion on blockchain finance, economic opportunities and risks, focusing on mainly This session will be moderated by Professor Te Bao, who chaired the morning DeFi session. Joining him on stage are distinguished panelists Prof. Lyandres, Prof. He, Prof. Karthik, Associate Prof. Xiao, and Associate Prof. Fahad.
Okay, so hi everyone. Thank you for staying with us. My name is Te Bao. I'm the moderator of this session. So in this session, we're going to have a panel discussion about the opportunity and challenges for DeFi and the future of blockchain finance. So as we can see here, we have distinguished panelists who are also the speakers of this conference. I think Prof. Lyandres and Prof. Saleh and Prof. Patak already gave their talks this morning, and the Professor He and Professor Xiao are going to give their wonderful talk tomorrow. So you're highly also encouraged to stay with us. So I think in this session, I will first start with some specific questions, maybe related to your talks in this workshop, and then maybe I'll propose one or two general questions, and then I will receive some questions from the audience. Okay, so maybe I'll just follow the sequence of the talk, like in the conference program. First, a question for Professor Lyandres. So what do you think will be the unique investment opportunities DeFi will offer compared to traditional finance, and what risk do you think the investor should consider in this emerging market?
Thank you for the great questions. I can talk about this for quite a long time, but we don't have much time, so I'll be brief and I'll just mention, I guess, a few examples of investments in DeFi that are different from those in traditional markets. So in traditional markets, most investments, probably all of them, get return from either changes in prices or dividends, right? And we can talk about kind of just direct investments in assets or derivatives, that derive kind of returns from changes in prices of the underlying. Now, in DeFi, that's also possible, obviously, but there are also other strategies. I'll mention a few examples. You can think about, providing liquidity to pools, right? So basically becoming a market maker. You can give collateralized loans, right? Basically becoming your own bank, right? That's something that most people cannot do in traditional markets. You can think about staking, right? So basically securing, blockchains or contributing to governance of particular protocols and receiving for that rewards of either kind of the blockchain native currency or protocol tokens. If you talk about staking, you can think about liquid staking, where you can also at the same time give collateralized, use the assets as collateral. You can think about restaking, which is kind of securing multiple protocols at once. Probably one of my favorite things is arbitrage in DeFi markets. So we just talked about flash loans. So it's really easy and cheap to try arbitrage opportunities in DeFi, and that's something that's usually not accessible in traditional markets. And I guess those are just examples, and there are several more. But this just illustrates that there are many more investment opportunities than just buying and holding assets in DeFi relative to TradFi.
Okay, thank you very much. So then maybe I'll just follow with the question for Professor Saleh. So Professor Saleh, I think in this morning you talk about the economic model for decentralized exchange with concentrated liquidity. So basically, can you just tell the audience again, like how do your model differ from the traditional models, and what are the implications of these models for market efficiency, liquidity incentives, and risk of liquidity providers?
Thank you. So if you don't mind, maybe I'll broaden it out a little bit, not just talking about my particular model, but I think what is sort of the most fundamental distinction between, decentralized finance, or if you like, decentralized exchanges relative to more traditional. And that, I think, far and away is access. right? So obviously you don't have any onboarding process, for example, to engage in terms of trading at Uniswap or being a liquidity provider, et cetera. Now you're asking about sort of market outcomes from that, and that's, in some sense, that's the $1 million or $1 trillion question when it comes to regulators and so on, right? Because on the one hand, you could say, hey, there's more access, so we're going to have more competition for liquidity provision. We're going to have more trading because we're going to have people who wouldn't otherwise be able to trade in these markets trading, and so you're going to have positive externalities, and you're going to have more economic value created. All sounds great, but then on the other hand, when you increase access, you don't just increase access for well-intentioned people, you increase access for malintentioned people. You increase the opportunity, for example, let's say in Uniswap v4, for me to create a liquidity pool that's a giant scam, right? And so access is a double-edged sword, and that's actually what policymakers are so heavily wrestling over, which is that on the one hand, we have so much more financial inclusion from this stuff, but on the other hand, we have a huge investor protection issue.
I see. Thank you very much. Okay. Yeah, I mean, when I'm addressing the question to one of the speakers, actually the other panelists, if you have some insight to contribute, you can also feel free to chip in because, for example, I saw Professor Karthik, do you want to chip in for Professor Saleh's question?
Sure, yeah, so maybe just very quickly, I think the point about increasing access to malicious actors is very, very valid, right? And we want to be able to provide security and ensure that only the legitimate actors get the benefits of this, because otherwise the public will start losing trust in this, and then that's going to lead to loss of both public confidence as well as people just saying this is all a scam. So we need to be really careful as a community to make sure that we provide the space for legitimate actors but keep out the bad guys.
I see. Thank you. Actually, I just kind of recall, actually I have a question for Professor Lyandres' talk this morning. So you mentioned also like the DeFi market increased the kind of a room for us to explore the effectiveness of quantitative trading strategies, and you also explored a lot of them in your model. And so I have a question like, so then based on your model, basically how are the most successful ones that look like? So for example, are they more like trend chasing or fundamentalists, or are they more similar to contrarian traders and so on?
Right. So I don't have definitive answers, right? But in general, this market is great in that all the data is available, right? So it's really easy to look at different strategies and examine them, right? So the strategies that seem to be working well to some extent are kind of the most quantitative ones, in the sense that basically the ones that describe the concentration of liquidity provision into V3 pools. This is the only thing that I found sort of to work sometimes. The rest doesn't seem to.
Okay, thank you so much. And then maybe I'll just move on to Professor Karthik. The question for you will be, what are the major security challenges in DeFi, like smart contract vulnerabilities and oracle manipulation, and how can these risks be mitigated?
Thank you for the question. So I'd also like to broaden it out broadly to security challenges and how to mitigate it, not just specific to my work. So I think the main thing that is missing from the talks I've seen this morning and so on is, what can we do as a community to really foster this sense of accountability? And this is something that all of us in this room need to think about. So I'll give a couple of examples. So in my talk, for example, I talked about how developers are willfully ignoring some of the guidelines for how to develop smart contracts securely. And there are zero consequences for doing so. There are static analysis tool developers who claim to detect bugs, but they don't detect the bugs. And the developer uses that, and who's responsible for that? Even more broadly, what about things like when you discover security vulnerabilities and report them? I mean, there was another speaker this morning who was talking about how sometimes it takes 500 days or so to patch some of these issues. Now, in 500 days, attackers can do a lot of things. What is the governance mechanism that we in the community have to provide responsible disclosure and also make sure these vulnerabilities are patched? I mean, this is something that in the traditional security community, there are well-known mechanisms, but not in this domain, it looks like. So that is, again, something I think we as a community need to formulate and think about. And even looking broader at the DeFi ecosystem, right? So in my talk, I was talking about how, for example, even if a few oracles, even if a few exchanges say we keep the bad players out, that can go a long way, because a small fraction of the players are responsible for a large fraction of the attacks and the losses due to that. So again, we need convergence, we need governance mechanisms to make sure that the bad players are kept out, and maybe there should be legal consequences. Now, I know that blockchain, the great thing is it's decentralized, there's no central governing authority, and we don't want to get rid of that, right? We don't want to throw the baby out of the bathwater, but at the same time, wouldn't it be good if there was a community-based mechanism to identify the bad players and maybe formulate laws like the SEC does in the US for bad players in the stock market? I don't have solutions. This is more a call to arms to people in this room to do this. Thank you.
Okay, thank you. So then maybe we move to Professor He. So Professor He, so in your view, how do consensus mechanisms like POW or POS affect economic incentives for participants and impact network security, scalability, and decentralization?
All right. So myself is more interested in the applications of blockchain, and I might personally do not get too much into the DeFi, because to me, like at this point, DeFi is a little bit off the track, to be honest, and I would like to say that, even though people are excited about it. Myself is more excited about this consensus transition of the proof of work to proof of stake, and it seems like at this point that a proof of stake working extremely well. I did a long time ago, and did it's like a little bit of the empirical analysis for economists that actually it's not common for it's for sure this will happen is that the people will for sure to slash the bad guys. It's not obvious at all. And you require coordination, etc. And at that time that we look at the data, seems like indeed, first of all, that the bad blocks indeed gets cut out and being slashed. And recently we did that analysis again, and seeing that that's also true. So that as a community on chain seems quite functioning well, and therefore that I feel the POS movement is really brings social welfare to this community. One thing I do want to point out that is off-chain is a big trouble, and maybe related to all these things. Let me give you one example that has not been resolved. Okay, so in the study we had, we basically take the Explorer, right, this beacon chain Explorer, right, and I'm more relying on my computer science co-authors to figuring out all these things. And I realized that later on, Beacon Chain Explorer, which is basically a data provider, off-chain, so we took it, and then check out that there's a lot of mistakes. It is exactly mistakes, so that we actually wrote the wrong paper. We posted the paper, somebody reached out to us saying this is wrong, and we said, how can it be wrong? This is a blockchain. And then we checked it and realized that the Beacon Chain Explorer, lots of data was wrong. Okay, we were regretted, and then we mindfully reporting to the Beacon Chain Explorer. 5 years later, nothing happened.
Okay, thank you.
Can I just throw something in here? Sure. Because I think it's interesting, the last two things that were said here, because Karthik was talking about how as a community we need to have standards. And then the thing is, but it's decentralized, so it's not like, oh, there's a government or whatever. But then Zhiguo was talking about how his Beacon Chain Explorer was giving him the wrong information. So I think, if you're a user in this environment, you're like, well, who are the authorities or sort of the authoritative figures that I'm supposed to turn to? And so, this is kind of one of the fundamental problems in this universe when you have this decentralized setting. It's not clear who are those sort of authorities, right? And that's, again, a very fundamental thing when you think about policy and you think about regulation in this space, is who would be, like, who is the community in some sense, right?
Do you think there's a call for a regulator or something to help to coordinate?
No, part of what I'm alluding to is that, like, if you follow the regulatory discussion, for instance, disclosure is a big deal to protect investors. But one of the most fundamental questions that comes up the moment that topic comes up in the US is, well, who is going to provide the disclosure? Because we don't have issuers in the traditional sense, right? Like the Uniswap token is not issued by Uniswap Labs or Uniswap Foundation in the sense that IBM stock is issued by IBM, right? And so again, this is, because of this decentralized setting, you constantly have issues about, well, oh, so if we want to rely on certain authorities, there aren't really any authorities. We can sort of coordinate an authority and say, like, you know, Vitalik Buterin's really smart, maybe we should listen to him, but it's not like he's actually appointed president of the, you know, DeFi ecosystem. It's more like a social consensus thing at that point.
Okay, thank you. And then maybe we move to Prof. Xiao. So Prof. Xiao, yeah, how is the DeFi transforming traditional trade finance, and what are the key advantages and challenges of using blockchain platform for global trade? And specifically, I think your talk is going to be about the perpetual future. Can you talk about, let's say, the advantage of this, disadvantage of this financial innovation, and maybe other interesting financial innovation on blockchain?
Oh, I think that's two very different questions. So let me refer to first one. So for the trade finance, defining the trade finance is still at a very early stage. So I think so far the biggest advantage is that especially for the small trading firm, they have big access because the infrastructure is already there. You don't have to pay the cost to build up the infrastructure. You have easy access to a rather good and advanced trade finance network. That's the biggest advantage so far. For the disadvantage or challenging part, I think are two parts, especially for the trade network. The first one is that now it's international trade time. So for any trading firm, essentially you have to deal with many nations at the same time. And this stage, because it's still very early and still very small, so I think the regulator hasn't paid too much attention to the DeFi in trade finance. But in the future, if country take it seriously, they can put some regulation requirement, then you'll face problem because there's a huge coordination problem between different nations. Right? If you are a small trading firm, you deal with 20 customers, 10 customers in their nation approve DeFi, 10 customers don't approve DeFi, then you have to operate in different model. That's going to be a big headache. Or those 10 customer nations, they have different adoption to different networks. That create a huge coordination problem. Another, I think, potential concern is that because it's chain system, so anyone who get access to the chain can get all your transaction information. But for the trading partner, potentially you want to keep some trade secret. For example, you don't want your competitor to know who's your supplier and how much you order and at what time you put the order. And for the typical trade firm, if you put a big order, right, your customer may get some information. Public may know you have a big inventory, so they get the upper hand in the negotiation process. So in that sense, how to preserve certain information on the chain, I think is another challenge and interesting question to explore. And for the second question, I think because I have enough time for tomorrow, I just say, hey, it's very different from, you know, the research you have seen today, because today is basically, we take the blockchain systems very special, we try to explore what's the special mechanism there. But tomorrow my talk is more about, you know, the blockchain can give us do some experiment, can show us some evidence about what's the finance people have been talking for years, but never get a chance to practice, but how the blockchain system, how the crypto market actually show us the evidence.
Okay, thank you very much. So then maybe before I move to some general questions, I'll just open the floor shortly for the audience, since we have so many world-leading experts on different topics in blockchain, finance, and DeFi. I don't want to monopolize it. And so are there any questions for the panelists? And if you have, you can also address to a specific panelist you want to ask. Any question?
Here at NTU, there is a program here particularly on blockchain, but how do you as educators see the intersection of what you're doing with how you educate, which is still very different in terms of how you divide courses and curriculum?
Okay, that's a good question. So yeah, we have our master program in blockchain. Thank you for offering the opportunity to help us to promote this program. And yeah, actually, I'm just also curious. So let's say for the panelists in your universities, do you also have already a specialized program or kind of undergraduate major or graduate major in that? And if you have, could you share with us how it works? And yeah. So how do you incorporate blockchain into your teaching curriculum, or have you already got some specialized degree programs or certificate programs in it?
Let me clarify the question. I didn't understand the question. So is this educating blockchain or using blockchain technology to help us teaching? Blockchain technology.
Talking about educating about blockchain.
Oh, that's easy to answer. I can start. I've been teaching basics of blockchains. Both I recently moved from University of Chicago to Stanford. Now Stanford, everybody talk about AI now. So nobody talk about blockchain anymore. So that's a challenge. But there are many different ways, and it depends on the background. I always feel like stuff from this consensus is quite useful. It's like a temper proof, that kind of thing. But if people sitting in my class would like to asking the question that at what point they should buy cryptocurrency, that's a totally different question then. So there are a lot of online courses that's helpful, but myself is not particularly get into the educating the blockchain. I do have some students are interested in this, and then there are a lot of resources online on that. There's no optimal way. It all depends on the background. The unique part of the blockchain is indeed, it's a lot of integration of interesting parts. Yeah. So I would push them to understand more on technology rather than the finance, because blockchain itself is actually not much about the finance itself.
So if I may add to it, right, I think there are two unique challenges to teaching blockchain, especially in undergraduate curriculum. So first is you want students to appreciate both the economic aspects of it and the computer science or engineering aspects of this, right? And many of the hard problems are at the intersection of these two. So by the time they get enough of a grounding in both, it might already be like, they might be in the senior year or in grad school. So I don't know how much of that foundation we can provide to students from all majors, but if there's a dedicated major, then I can see that being a conduit for teaching this. But having said that, the second point I want to make is I think all students, regardless of their major, should understand at least the basics of this ecosystem, because this is a brave new world, so to speak. And when students are faced with these, both from their own personal perspective in making investment choices, but also from a societal perspective, they need to be able to evaluate the trade-off. So here, we're not necessarily training students to be blockchain developers, but intelligent users of blockchain technologies in their day-to-day lives. And I think there is space, or there can be space for a course like that. So that's at least what I believe.
Thank you. Any more sharing from this? Okay. Any more questions from the audience? Yeah, I think we have a large variety of areas we can touch, like investment and economic modeling, consensus, mechanism security. Anything? Want to ask?
Okay, so thank you. So you have mentioned the regulation, right? So my question is, now you can see the SEC is chasing many companies. It's chasing Solana, chasing Uniswap, even chasing the OpenSea. So I just ask for your opinion of what you think in the future if SEC is doing so and doing more fiercely with these DeFi companies.
Maybe I can start it. So I want to clarify, when I said there needs to be broad enforcement or broad agreement on what we should demand from the community, I didn't necessarily mean regulation. It could be a governing body that is separate, that has the ability to enforce certain rules, but doesn't have to be like regulation in the form of laws. Having said that, I don't believe this should necessarily be done by the SEC or a single country's agency. I think this is a kind of thing that requires broad buy-in. So at the risk of sounding grandiose, maybe something like the United Nations of blockchain, where every country or every participating entity has a vote, and then, as a worldwide body, then you decide what the standards are, what was the minimum ethical behavior we expect from all the participants. And it could even be voluntary. Big companies could take a pledge to say they will never indulge in certain activities. Now, regarding SEC going after specific blockchain companies and prosecuting them, I don't know enough about those particular cases to comment on it, but I think it's good that there is some form of accountability being brought into this, even if not in the way that I would have liked. So I'll leave it there.
So let me just add a little bit to the discussion. So first of all, I think talking about the SEC as though it's like some constant, that it has a particular view and it's going to continue down that stream is a bit misleading, right? So for instance, in the United States, we're going to have a presidential election in a few months, and the incumbent is not on the ballot. So it's quite possible that the chairman of the SEC is going to be unemployed in February, right? Now, what does that mean for the enforcement actions that he's taking? Because to be clear, like serving a Wells notice isn't even suing somebody, right? So there's a long trail that has to follow that. And it's not clear that the current leadership at the SEC has that kind of rope. A few years ago, we had somebody who was the chair of the CFTC who was very positive on crypto, but he's not there anymore, right? So it's not the case that a particular regulatory agency has a particular view forevermore. There's a lot of politics behind this. And if you talk to people in the private sector in the US in this industry, in the crypto space, they are very aware of the regulatory uncertainty. And it's hard to predict how that's going to come out, in part because, again, there's an election coming up, and how that one resolves is going to have some impact on all of these sorts of things. The only thing I would say is that I kind of feel like it would be nice if industry took a little bit more of a lead, rather than just kind of sitting back and going, well, clearly they have a preference in the election, but I won't get into that.
Okay, thank you. I think I still have a list of questions to go through, but maybe for the interest of time, I will just select one for all the panelists. Okay, so the question I select will be just maybe as the following. So how would you like to categorize the current state of the blockchain finance ecosystem? And maybe besides that, what do you think will be the most exciting thing to happen, or you look forward to in the next maybe 5 to 10 years? Yeah, maybe again start from.
Yeah, so maybe I'll start very briefly. So I think there is my personal take, right, is that there is very big potential in DeFi. It could allow solving a lot of problems that traditional financial markets cannot. But I think that currently the potential has not been fulfilled. There's a lot of different protocols, different applications that have been developed, but the usage is still not there. So traditional people don't really use DeFi. I think if and when things are going to change is when the regulation, and that's coming back to the previous question, right, is going to be such that it's going to allow basically trading real-world assets, on blockchain. If that happens, that will bring kind of the 1 billion users that people have been expecting for a long time. But when it's going to happen, that's a big question.
Thank you.
So let me just say the following. If you had asked me in 2018, what are you looking forward to in the next 5 years? What do you expect to be the big thing in the next 5 years? I would have never said decentralized exchanges. And I think if you'd asked any finance professor about the idea of having an automated market maker having mechanical prices, they would say you're insane there's information in markets, this is not going to work, but it turns out we're all wrong. And so one of the things that's most impressive, I think, about the crypto space that draws me to it is the incredible inventiveness and creativity of people in the space. So I don't have a prediction for what I'm really expecting in the next 10 years. The only thing I can predict is that I'm going to be surprised, and I'm looking forward to it.
In my opinion, the current state of the blockchain ecosystem is like the Wild West of the 1800s and so on, where you see this in these cowboy movies, and it's shoot first, ask questions later kind of ethos. But I think that is going to change in the next 5 to 10 years. How it will change is still up to us to decide. I think we need more. It's going to coalesce around a few big players, but we need broad consensus on what we want these players to do and how we want this ecosystem to evolve. And at least my hope is that it will become more of a tame kind of a market, but without losing the innovative edge. Thank you.
Thank you.
Okay, so I think for the finance, I have very pessimistic opinion. So based on the history, based on my knowledge, I think most of the finance innovation, the fundamental driving force is to get around regulation. But you see in the last few years, you can see a very clear trend that the regulators start paying attention to the blockchain finance, so people start impose regulation. So I think maybe for the next few years, you can see a lot of interaction about the regulator impose some rules, and there's no innovation trying to get around certain regulation. I think that's going to be, to my understanding, that could be something very interesting and exciting to look at, how to play with each other.
Thank you.
Okay. I think the things that I'm really hoping for is this like tokenized stuff. However, in my mind, the beneficiary of tokenized technology is not the current this ecosystem is about, because in my mind that the tokenization has helped the settlement, etc. That it's huge. And New York Fed is thinking about that. That's really clearly you see the efficiency improvement. But why this has anything to do with the DeFi? That's people might use that kind of knowledge and they use it. But from a economist perspective, this is a very clear way to help to use the great technology to help us very imminent issues. And as a result, that I just feel like maybe that the ecosystem that are right now at the DeFi, perhaps they should think about how does it make the technology better in terms of the helping. Think about it. There's some discussion in this mode bridge where the CBDC, the SWIFT, all these things, right? Think about it. How do you help on these projects rather than DeFi, where exploiting people's speculative beliefs, and then somebody is losing, somebody is gaining, and then we just get into this gambling casino. That's just, gambling casino is not what we want when I first time see the blockchain technology.
I see. Actually, maybe can I follow this discussion a little bit? So then you mentioned CBDC. So how do you see the future for CBDC? And let's say, especially since you are also leading expert for financial market in China, can you say something about, let's say, blockchain? We know China banned cryptocurrency, but can you say something about the implication for China?
I talked to Daryl Duffy at Stanford quite a bit, and we share similar views. Is that the CBDC at the domestic economy context, we already seeing that the benefit is very small. Right? Nobody uses it in China, even though the government touting this as a great success. And the same thing as Europe, etc. There's a lot of issues associated with that. It's actually a lot of designers don't want the CBDC to be too good, because the CBDC itself is a very, very strong force of reducing the money multiplier. That's a super dangerous for a country's economy, macroeconomy. Now, once you have a CBDC, actually, it could be used quite efficiently when you settle the cross-country trade. So that's this Bridge and Hong Kong, HKMA, and other Thailand that they are doing that. And those things are kind of like very obviously that we should work on that kind of issues. I will stop there.
Okay, thank you very much. I think now it's basically the time for the panel discussion. So let's thank the panelists again, and I'll hand it over to the moderator.
Before we conclude for the day, I would like to take this moment to extend our deepest gratitude to all the distinguished speakers and session chairs for their invaluable contributions throughout today's session. Thank you everyone for a remarkable and insightful first day of the 2024 NTU Blockchain Symposium. We have covered an impressive array of topics from DeFi to security and smart contracts, with contributions from some of the leading minds in blockchain research and innovation. As a reminder, the symposium continues tomorrow with equally engaging sessions on cryptography, privacy, economics, and regulation, among others. We start at 8:30 a.m. and we look forward to welcoming you all back for another day of thought-provoking discussions and presentations. Until then, have a great evening and see you tomorrow.
1, 2, 3. Last one. 1, 2, 3.